What is up, ladies and gentlemen, and welcome back to episode 6 of our Futures Bootcamp. Of course, today we are covering time frames, and we know as traders, we use a bunch of different time frames, not only for different trade types. For example, if we are taking leap options, we are going to be in a much higher time frame than if we're taking a scalp that's going to be a 2 to 3 minute play. Right? So we need to establish the different types of time frames that we're going to use for different types of trades, and that is what we're going to get into in today's video. We're also going to talk about how to establish your higher time frame bias, much like we talked about in our market structure video. So if you guys didn't check that out, make sure you guys go check that out first, then come back to this video so it all does make sense. Now we're also going to talk about, after you do establish that higher time frame bias, how to switch down and establish the setup that you may be looking for, and then switch down to an even lower time frame to go ahead and establish that entry and exit zone for yourself. This is going to help you guys really get a full idea of where the market is heading, both on the 1 hour, 4 hour, and 1 day, also on the 15 minute, the 30 minute, also on the 1 minute, the 3 minute, the 5 minute. This is going to help you guys understand structure overall, so that when you guys are in a trade, you guys are going to be much more confident in the direction that this trade is moving, instead of being confused on, is the 4 hour looking bullish but the 15 minute is looking bearish, etc. So this is something that a lot of traders do neglect, and this is something that is very, very important to becoming profitable. So I really do want to dive into this very, very heavy today, and I can't wait to get into it, so I'm not going to waste any more time. But I do have two quick questions for you guys. First of all, I'm playing around with some color grading stuff, okay? I am a trader. I am not a graphic design guy. I have no clue what I'm doing. So please let me know in the comments down below if this looks good or if this looks bad. I really don't know. Also, let me know what you guys think about the setup. I went ahead and changed up the setup. I think I might show you guys at the end of this video kind of what I did, because it looks pretty cool in my opinion. We do change up the setup every couple months. As you guys know, I have severe ADHD. I really do like change. So new setup, whatever, right? So can't wait to get into this. Make sure you guys do drop a like and subscribe as always. And last thing, if we do get 50 likes on this video, we will be giving away a free eval and a free premium membership tomorrow in our live trading session at Market Open. That is going to be free for everybody. All you have to do is click the first link in the description down below, join up on our free Discord, be in our live at Market Open tomorrow. And of course, if this video has 50 likes, you will be entered into our giveaway to win a free eval or a free month of premium. Now, I'm ready to get into it if you guys are. So jumping in here, first, what we are going to be looking for on our time frames is we are going to look to establish a bias like we talked about. Now, once again, if you guys didn't see our market structure video, please go check that out, because that's going to give you guys the intro to what we're going to be talking about here. Now, first, we are establishing a market bias on the 1 hour, the 4 hour, even possibly the 1 day time frame. And our reasoning for this is to find our directional bias. For example, like we talked about yesterday with liquidity sweeps, say that we go and sweep New York highs, okay, then we are looking very bearish on the 1 hour and the 4 hour. Well, from there, we can go ahead and establish that we are looking pretty bearish for the day or for this week, right? After that, we can go ahead and find that structure, see which way we are moving, and see if we can switch down to a lower time frame and establish an entry zone. Now, the questions that you guys are going to be wanting to answer, and this is something that I would definitely write down, is you are going to want to establish, what is my bias? Where is the direction pushing the chart? Okay, write this down. Market is looking bearish because XYZ. Market is looking bullish because we just swept London lows and we are looking to press higher, right? So that's what you want to establish first. You also want to establish if you are in an expansion move or a contraction move, like we were talking about with range bound trading, which we have been in for a while now, where there really isn't any explosive moves to the upside or to the downside. That would be an example of non-expansionary moves. An expansionary move would be, say that we have that range, right? Then we break above that range, retest it, and it looks like we are now moving either up or down in a true directional status, okay? You want to understand which way price is looking to go. And the reason that we did talk about liquidity yesterday and timeframes today is because a lot of the times on these higher timeframes, that is where you can establish those liquidity sweeps or see where direction is taking us due to some liquidity. We might be running up to those highs to grab some liquidity, then going to run back down to those lows to grab the opposite side of that liquidity and possibly even continue back to the downside. Things like that are the questions that you need to answer, and I seriously would recommend writing down these 3 questions for all 3 of our examples, because answering these questions is going to give you more understanding of the market, going to actually help you look back on your trades and see, was I right or was I wrong? And that is going to help you guys start to weed out the mistakes and start to stack on those strengths or good things that you're doing within your trading. So once we establish our 1 hour to 4 hour to even 1 day market direction, or actually draw in liquidity, Now we are going to pull down to our 5 to 15 to 30 minute time frames, okay? So just a little bit lower than those. Then this is where we're actually going to find our setups, okay? So now let's say that we understand that we just went and swept London highs and it looks like the market is wanting to press down to, say, London lows, okay? Well, now that we know that, we can jump down to a 5 to 15 to 30 minute time frame and look for a possible setup where we can actually take a trade down to those London lows. We already know that price is looking to draw down there, so let's go ahead and look for our entry so that we can take the trade and profit on that move, right? Now, things like this is going to be your setup formation, your intraday structure, your VWAP positioning, things like that, those big things that you are looking for, either a bounce, either a flush through, all of those kinds of confluences, and then of course, orbs. Say we open up a market open, say that we are on, yesterday's highs. We go ahead and sweep those yesterday highs, then break back into orb. Well, when we break orbs downside on the 5 to 15 minute time frame, we are going to be looking for a possible setup to take those shorts to continue those down to yesterday's lows, or even possibly, London lows or something like that, right? So your questions to answer here are: what are my targets? Is there continuation? And is there a trend? You want to understand these three questions. These are very, very important questions, guys. Where are my targets? If we are going to be entering this trade, what am I wanting to target? Am I targeting yesterday's lows? Am I targeting London lows? Am I targeting yesterday's highs? Am I targeting PM highs, etc.? Okay. Is there continuation? Are we seeing that we are just chopping around? Is price action good? Or are we actually seeing continuation through these moves? Continuation through yesterday's lows on their way to London lows. Continuation through your PM lows on your way to yesterday's lows and London lows, etc. Right? Or say we break those London lows. Is there continuation? Do we break down and retest those London lows and then shove down farther? Okay. Is there continuation? Now we're also going to establish the trend. This goes hand in hand with the bias. With your bias, you should establish a trend, right? So if we sweep those London highs, for example, and we're pressing down, well, we are most likely in a downtrend. Well, we can go down to our 15 and 5 minute, draw out those trends, possibly with trend lines or something like that, and then take that trade in that corresponding direction. So first, like we said, you want to establish your bias. Where is the market looking to go? Okay. Then you want to come down to your setup on your 5 to 15 to 30 minute. And this is the question that you want to answer. How are we going to get there? Okay. So we establish where the market is going. Now we're establishing how the market is going to get there. Now is when we look for our entry. This is going to be as precise as possible. And that is why we switch down to our 1 minute, 2 minute, or 3 minute. Personally, I like the 2 and 3 minute. I think the 1 minute just moves a little bit too quickly, and a lot of times there is a little bit of, teleporting candles and stuff like that. So I am not the biggest fan of the 1 minute, but 1 minute, 2 minute, 3 minute, all work, okay? And this is where I'd be looking for your entry, okay? And the purpose of this is to find your entry. Like I said, you're going to be defining your entry, you're going to be defining your profit targets, you're going to be defining your risk and finding your stop loss, okay? This is where you find all of those things that is actually going to lead to you taking that trade, right? So I do want to talk about this because this is something that is very, very important, and this is why we switch down to a lower time frame, right? So say on the 4 hour and on the 15 minute or 30 minute or whatever, say from the 1 hour and the 4 hour and then the 15 minute to the 30 minute, we look insanely bearish, right? Say we look super, super bearish, okay? But then say we come down to the 1 minute and the 3 minute and we look very bullish. Okay, that doesn't mean that your bias is wrong. That just means that it isn't time for your entry yet. Say that we are looking for, as we want to answer here, what are the candles telling me? Like we talked about with storytelling in the second episode, are the candles telling me that we are going to continue bullish? Are the candles telling me that we are going to continue bearish? Are the candles telling me that we are coming up on support? Then we might run back up to resistance and then press back down, right? Are we breaking out and retesting, right? Something like that. That is what you are looking for, because you are not always going to be able to find the best entry on the 1 hour, 4 hour, 15 minute, 30 minute, but you can switch down to the 1 minute, 2 minute, 3 minute and look for a more precise entry. So like I said, if we are looking bearish on our higher time frames, then we switch down to our lower time frames and we look bullish. What are you going to do? Well, you're not going to take the trade right there. That's why we're looking for our precise entry. You're going to wait for price to draw back up, right? And then you're going to wait for that pattern to switch back. Then we are looking bearish on our lower time frames as well, and we have 3 points of confluence. We're looking bearish on the 1 hour and the 4 hour. We're looking bearish on the 5, 15, and 30 minute, and now we are looking bearish on the 1 to 3 minute. Now I can look for my entry. We already have defined our profit targets, our risk, our stop loss. Everything is defined. So now all we have to do is simply execute the trade based off our strategy. Okay. So none of this, what we have talked about at all, has nothing to do with your true strategy yet. Okay, all of this is defining what your strategy is going to go off of. So for example, if I'm taking an orb trade, okay, but we look very, very bearish on the 1 hour, the 4 hour, the 15 minute, and the 30 minute, well, if we get a 1 minute breakout of orb to the upside, and that is against my bias, of course, as always, we know we're not getting married to our bias, but I might take a second and wait to see if we do see some selling pressure that would push us back in the direction that we believe price might go. Okay. Or is there an idea that maybe our bias is wrong and this could start to prove us and show to us that, hey, we might be switching to a new direction? Because you want to be open and understanding to the market, because once again, you are not moving the market. Okay. You are not moving the market. You can take whatever trade that you want. Okay. And the market is still going to go in the direction that it's going to go in no matter what. If you are able to jump in with the market and go that direction and follow the market, you will win. If you are going to sit there and try and push the market in an opposite direction, you are going to lose. It's that simple, right? So we want to understand that on the lower time frames, try and get all of those time frames to line up so we feel as confident as possible in our trades, right? Now, like we said, we're establishing our profit targets, our risk, our stop loss, all that kind of stuff. Super easy. Now, this is where we relate back to episode 2 with candlesticks and chart patterns. We want to understand, what are the candles telling me? Like I said, if the 1 minute is looking like it's getting bought up, or the 3 minute is looking bullish while the rest of our time frames are looking bearish, well, that's not the best entry. We want to wait until that plays out, and we might even get a better entry, right? So if the 3 minute is looking bullish, well, price might push back up, and then when it starts to look bearish again, possibly coming up on resistance or something like that, then we can find, are the candlesticks starting to sell off? Is there selling pressure coming in? Is this just a pullback up to our fair value gaps, and now we're going to press off of this? Are we looking to sweep this liquidity right here? Are we making new liquidity, etc., right? So all of those things go hand in hand. That is why we have structured this entire boot camp in chronological order, because now that you understand what candlesticks are telling you, well, when you switch down to the 1 to 3 minute, you know what's going on, right? So if I would have taught this as the first episode, you would have no clue what I'm talking about right now. But this should start to paint the picture and really start to bring all of this together. So we also want to understand, what levels are we holding? What levels are we holding for both the bullish and bearish scenario? Are we coming down to support and we keep bouncing off the support, or do we keep coming up to this resistance and bouncing off this resistance, or do we go down to this support and swipe right through it like it doesn't even, exist? Things like that is what you want to answer there. Are we holding the levels that we are looking to hold, or are we holding the levels that we are looking to break, right? Now, last question. Is there a microstructure break? This is going to be something like a trend line break. This is going to be something like a support and resistance line break. This is going to be something that is going to kind of trigger that entry for you. Or is this, is this a pushback off of your fair value gap after a liquidity sweep? This is essentially anything that is going to give you an idea that we are breaking or pushing or starting a move in that direction, or continuing that move, because we don't need to get the whole entire move. We just need to get a portion of it, right? So you want to answer these questions, and it is very, very important that you guys take this serious. Please, please, please write down these questions if you guys need to, because it is very, very important to check out and make sure that all of your timeframes are aligning, or at least that you have an understanding, right? So if our timeframes are looking bullish, right, on the 1 hour and the 4 hour, but the 5 minute and the 15 minute and the 1 minute and the 3 minute look very bearish, okay? Well, I could say, hey, we have some support down here that we might be coming back down to, right? And if you have true understanding of the market, or have a true idea, good risk to reward, etc., well, just because the market is looking bullish on the higher time frame doesn't mean that you can't take a short. That doesn't mean that. It just means that you have to have the understanding, because if you get in a short and the market goes long, well, you need to have the understanding that you are working against the bias. So yes, it might not be an A+ trade, but you can definitely take it. But if that trade is to lose or go wrong or whatever, you need to understand simply why. Okay. Now, I do want to switch over and talk about how we actually do this, really, and how I kind of do this. And I'll show you guys, of course, examples on the charts in just a little bit. But for example, when I jump onto the charts in the morning, I establish my bias. I look at the 1 hour, the 4 hour charts. Are we making higher highs? Are we making higher lows? La da 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 da, right? Are we looking bearish? Are we looking bullish? Do we have draws of liquidity? Did we sweep liquidity last night? Blah, 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 blah. All of that kind of stuff, right? Then I switch down to the 5 to 15 minute when market opens. We're establishing our orb. We want to see that orb break. And then we want to see if we're actually getting an expansion move higher. Are we just going to consolidate an orb all day? Is price action going to be horrible? Those questions need to be answered. Now, we want to now switch down to the 3, 2, or 1 minute time frames and establish our pullback into orb high. Are we retesting orb high? Can I tell a story with these candlesticks and see we are getting bought up off of orb high? Or maybe we have a bearish bias for the day and we break orb high, and then we see a lot of selling pressure and we break back into orb high, right? So you want to understand all of this in tandem, because it is going to give you a stronger understanding, more confidence, and just truly, you're just going to feel better knowing what's going on, okay? You're not going to be right every time, and that's not the point. The point is that you have an understanding, and like we talked about with repetition, the market is all about repetition. Okay, the longer that you are in the markets and the longer that you're trading, the better that you're going to get, as long as you are able to follow your rules and continue to actually get better, right? So sorry to intervene here, but bro, it's hailing like crazy outside. I didn't even realize that, and then I started hearing like knocking on the window, bro. I was going crazy. Turn around and we got like pellet-sized hail out there. This Missouri weather, bro. It was 80 degrees yesterday, and now it's like 36. It's supposed to hail apparently and ice all day. So whatever. Okay, well, if you guys can hear that, I am very, very sorry. It is low-key pissing me off. I just keep hearing ting, 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 ting. Anyways, now we have talked about what we are doing for our orb. We are looking for the 3, the 1 minute, blah, blah, blah. Are we pulling back to orb high, and are we looking to bounce off of it? Or are we pulling out of orb high, and it looks like we may sell back into it? Those kind of things are the questions that you need to answer, because that is where we are looking for our entry. That is what we do every single day. We set up orb, we see, hey, are the candlesticks telling us something when we do break out of orb or come back into orb? Are we looking choppy? Where are we looking to go on the higher time frames? All of these questions need to be answered before you enter a trade. It is very, very vital. Now, I do also want to talk about one more thing before we do move on, and this really isn't too related to futures. This is kind of related to trading in general. But this is something with kind of how you are going to be using this per trade, right? So a lot of us are, technically scalpers or intraday traders. But for example, with swings, you might want to establish your bias on your 4 hour or 1 day, and then switch down to your 1 hour to 30 minute to establish your actual setup. Then switch down to the 15 minute to 5 minute to get your entry, because you are looking for a longer duration of a play. So this is how we actually move around these time frames. Because if I'm looking for a scalp, well, I'm only going to be in this play for a minute or two. So what do I need to look at the 4 hour for? Of course, it's not going to hurt you. But if we are looking bullish on the 4 hour, but we see a 15-minute pullback, well, then we can take that, because we're only going to be in the trade for 2 to 3 minutes, right? So those are things that you need to understand. Also, intraday, maybe looking at your 1 hour to 15 minute, and then taking your entry on your 5 or 3 minute. And for a scalp, you could look at something as low as your 30 to 15 minute for your bias, and then look at the 5 to 3 minute for your setup, and then switch all the way down to your 1 minute for your entry. Things like that is what you need to understand for what kind of trader you are. If you're looking to be in this trade for an hour or two, well, you're going to have a lot different of a setup, bias, and understanding of the market than someone who's going to be in this trade for 30 seconds to a minute, And it goes even as far as, if I am in a leap option, well, I'm not even going to waste my time to look for an entry on the 1 minute, 2 minute, 3 minute, 5 minute, even maybe possibly 15 minute, because I know I'm going to be in this play for possibly 6 months to a year. Well, what is the 1 minute, 2 minute, 3 minute going to do for me? Nothing. Okay, so you need to understand how this is going to impact your trading, right? We're all going to trade different. We all realistically have different strategies or different ideas of those strategies. So you need to understand how to treat the bias, setup, and entry per strategy that you use. Okay, so I hope that makes sense. I know that's a little bit of a tangent right there, but I hope that makes sense, because this is something that is very, very important, right? Depending on what kind of trades you take, how long you're in these trades, etc., this is how you're going to define it. And I would say, if you're in a swing that's going to be a couple days, follow these rules. If you're in an intraday trade that's going to be any more than an hour long, follow these rules. If you're in a scalp that's going to be anywhere from a minute to possibly 30 minutes, I would follow these scalp rules. Okay. Now that we understand all of that, let's go ahead and jump into our actual session breaks, talking about things like Asia session, London session, and New York session. For example, when I was talking about, in my example, things like sweeping London highs, then running down to London lows, I'm going to talk about that here, because this is another very important thing to help you establish your higher time frame bias, and also establish what is going on even on your setups and things like that. So jumping over here, taking a look at things like sweeping these highs, okay? So for Asia session, we are normally seeing a lot of consolidation. Then in London session, we are kind of setting up for New York. And then we all know that New York is our most volatile session most of the times. So that is when we see those big expansionary moves normally, okay? Of course, things can change. Sometimes Asia session is very, very volatile for some reason. Sometimes New York session is very, very choppy. A lot of the times, just for a little bit of a rule of thumb, when New York is more choppy, Asia is normally a little bit more volatile, and in return, when Asia session is a little bit more choppy, then New York session is a little bit more volatile. That is a general rule of thumb. Once again, that is not going to happen every single time, but that does happen often enough for me to mention it. So taking a look at this, we are looking for our session sweeps. Okay, this is one of the easiest ways to find session sweeps, right? And that is simply going to be marking out your London highs and your London lows, then seeing when we come up to New York highs, we might sweep these highs and then start to press back down, where we can now switch down to our setup timeframes and our entry timeframes to look for a trade to take down and sweep those London lows, right? Or we have an idea like this on Asia, where we do come up, then we come down, then we form a double top, and we can take this trade back down into those London timeframes. And then from London, we see that we come up and we sweep these highs. Well, now that we know that, we can see if we can go sweep these Asia lows, right? Well, once we sweep those Asia lows, where might we be heading? Well, we might be heading back up to sweep these London highs. Now, of course, we could have easily broken down and retested and continued to the downside, and that will happen. But for this example, I'm showing you guys what this could look like on your higher time frames if you are actually going to establish this bias in the correct way, where you are also looking at your session breaks, because looking at London high sweeps, London low sweeps for New York session is one of the best ways to find great entries on sweeps. So we're going to jump over to the charts in just a second and take a look at that, because there's a few indicators that you guys can use to make this a lot easier, so you guys aren't having to find, your higher time frame, your setups, your London lows, London highs, your PM lows, PM highs, all of these things. We're gonna do it as easy as possible. Okay, I want to make this as easy as possible for you guys. So that's exactly what we're gonna do. Let's go ahead and jump over to our charts here and take a look at some of these indicators, and then start to kind of talk through how we can actually use that market structure information that we talked about just a few days ago, and then actually input that into our time frame video that we were talking about now. Now, jumping over to the chart here, first, I use the ICT kill zones and pivots. This is probably the most popular indicator out on TradingView right now. Very, very easy to find. It's free, of course, and these are all my settings. I really don't think that I missed any of my settings. The only thing that I would change is put your time frames up to 4 hours so you can actually see these sweeps in action. But y'all can already probably establish a few of these liquidity sweeps that we've been talking about. Well, where do I see some liquidity sweeps? I'll tell you right now, I see a liquidity sweep right here, where we do come above these highs, sweep these highs, and then press back down. So we can switch down to a lower time frame and try and find that. But personally, I always like to look for a sweep of London highs. And where do we see that happen? Well, we see that happen right here, and this would have been a absolutely amazing entry. Whether we find the entry here or not, this is just a great trade. So we can come here, we can see New York session opens. We will realistically get our orb break on the 5-minute time frame. So let's go ahead and draw that out. Well, where does this start? So this would be 8 p.m. or 8 a.m. orb right here. So we can draw this out as orb high and orb low, and then go ahead and see where do we end up taking this trade. So right now I'm on the 5-minute. This would be my setup point, right? So I'm finding orb high, I'm finding orb low. Then we switch down to the 2-minute time frame, right? And we can go ahead and establish possibly an entry, right? So where is our entry? This is a beautiful trade. I'm pretty sure we actually did take this trade. So here is our entry. We press off, we retest on this 2-minute time frame. We take this trade right as candle closes here. Well, right as candle close would be right here, sorry. Even better entry, right? Then we put our stop loss somewhere like above these wick highs, right? And then what do? We absolutely pour here on our 2-minute time frame. I mean, look at this. Look at this trade right here. And what is that from? That is simply from understanding a higher time frame bias, understanding that we might be sweeping these London highs. Then when we do sweep those London highs, we switch down to our 5-minute. New York opens. We go ahead and draw out our orb. We take our orb trade as we normally do. So this is showing you that it pairs with whatever strategy you're using, right? And you can find this entry due to realistically whatever strategy you have. I guarantee you that there's a fair value gap up here that you could have targeted for a BB model. I guarantee that, well, I'm showing you right now that it works for orb, and probably whatever strategy you have out there, you could have probably found an entry with this play, especially if you understand what liquidity is and how to use it. Now, that is how we actually use these timeframes. I mean, I'm giving you guys a real example. Went to the 1 hour, we found the liquidity sweep, or we are looking for that liquidity sweep. Then once it happens, then we switch down to the 15 to 5 minute. We wait for it to break back in, and then we wait for market to open. Once market opens, then we are now establishing our orb, and then we just get into our bread and butter. After that, it's just barbecue chicken, baby. We just start cooking, okay? After that, we're in our trade. We get out of our trade. We go do whatever we want because we just made a bag. I mean, one contract of M&Q here is probably, what, $700? You normally would buy, what, 3 to 5? That's a couple grand. I mean, pretty damn easy here, not gonna lie to you boys. So very, very, very simple and easy to understand. And here's an example. This is actually a great example, right? So we're not always gonna sweep these highs, and this is why you guys have to wait for this break, because what happens here? Well, we actually break and we retest these highs, okay? So look at that. I mean, this is a great breakout and retest, right? We break out, we retest, and then we press up. Okay, so it's not always going to happen where we're going to have a liquidity sweep, and don't always be looking for a liquidity sweep, but understand the possibilities for both of these things to happen. Okay, you want to understand if we are going to possibly see a liquidity sweep, if we possibly are going to break out and retest, right? And then you want to wait for the market to give you that idea and direction, okay, on your higher time frames or on your setup time frames, and then you'll switch down to your 2-minute like we're on right now and possibly look for, hey, we're getting bought up off of the zone. What do I see and what can I establish? Well, I can establish that we did sell right back down into London highs, but then what do we see? Buying, 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 boom. Okay. So those are the things that you are going to be looking for. And especially like once we break a high like this, you can find another entry, possibly like right here where we come back down and roughly tap into this golden zone, or sorry, roughly tap into this fair value gap here, taking the trade all the way back up here. Things like that are going to help you a lot. So please, please, please do not neglect time frames. Okay. Please, 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 please. I ask you very, very nicely. So let's go ahead and I don't know why my chart's all messed up here. So we can't go back too far here, but let's see if we can find anything else here. Well, here's even a liquidity sweep of these lows from New York PM here on Asia. So we sweep these lows on Asia, then we come back up, and then we do the same on London highs. Like we were talking about with once you sweep one side, you're probably going to go back and sweep the other side, whether that is Asia or whether that takes you all the way through London. And then for London going to New York, we sweep for New York, right? Those are the things that you really, truly do need to understand, because when you understand when, where, how the market is going to get somewhere, okay, that is how you actually have that idea of we might possibly see a trade or we might possibly not, okay? That is how you protect yourself from over trading, because if I see something where there's times where I look at the chart and I say, I don't know where market's going. I don't know. I truly do not know where market's going. What do? Nothing. Nothing. You sit there, you study the chart, you understand, okay, well, I didn't see much, so I'm going to sit here and I'm going to watch the chart and I'm going to see what happens, I might even just pick a side. I might just be like, I don't really know what's going on. Let's just say, bullish, right? Then we'll see, am I right? Well, 30 minutes later, I'm going to know if I'm right or not, okay? And then I'm going to say, well, why was I right or why was I wrong? Write that down. Was there good market? Was there something that I missed? Was there something that maybe I don't even know about and I need to go teach myself? Things like that are going to help you guys get better at trading. They're going to help you guys get better at understanding the market. Because once you start to understand the market, understand what the market is doing and why it's doing it, that is where you see a lot of success come out of trading in general. Okay. So this part should be very, very easy, right? And really, this was the best example right here. So we're on our higher time frames. We established that we are getting a possible sweep. Then we switch down to our 5 or 15 minute. Now I'm switching down to the 5 minute. Okay. Then we can go ahead and zoom in. Okay. Once again, waiting for New York to open, or even possibly taking our 7:30 a.m. orb an hour before market opens. Okay. Then we can establish that orb, take the trade down, wait for market to open. Market is also pushing in our direction. We're seeing that all three of our bias or confluences are moving in the same direction. We know that we just swept those London highs on our higher time frames. Boom, we're looking bearish. We know that on the 5 minute, we broke back down and we're retesting. I mean, look at this candle right here. We're retesting these London highs and pressing down. Boom. Setup time frame is looking bearish. Then we go down to our 2 minute time frame. La da 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 da. And we wait for orb to break. Well, when orb breaks, what do we see? Well, we get this orb break, then we see a retest and a push off. What do we now know? Higher time frame is looking bearish. Setup is looking bearish. Entry model looking bearish. We go ahead and establish our risk. We establish our profit or our targets. And what are our targets probably going to be? Well, our targets are, after we sweep these London highs, what is our target? Probably going to be London lows to see if we sweep, okay? And we actually do see a little bit of, resistance or support come in here where we sweep, then we bounce back up a little bit. Of course, we continue to sell off, but we do see a little bit of bouncing here. We see a little bit of an idea that we may come and sweep these and then push back up, because this is something that could have easily happened. I mean, we could have easily came back, retested, gone like this, bang, bang, boom, and then swept these highs and then done something like that. Very, very, very easily could have happened, but like I said, it's not going to happen every time. So you have to understand what is going on. Take your trims there. Okay. Then you let the rest of your play ride, and then you catch all of this move, right? And then I say, oh, what's my next target? Well, my next target is going to be Asia lows. Okay. Boom. Asia lows right there. Boom. Do we break Asia lows? Yes. We see some more resistance. What do you know? We see some more resistance. Probably because these levels matter. You know what I'm saying? And then what's following that? Well, we know that we have New York lows from the prior day. This would be yesterday's lows. This is a big level. And we absolutely pour through it. Funny enough, this is the one where we see the least amount of support step in. And then we just fly all the way down. Where do we end up finding resistance? Well, our indicator doesn't go that far, unfortunately. That's kind of stupid. But we end up flushing down. And the point is that once you're able to find, and I mean, this is the best example I could possibly give you guys, that we have our higher time frame draw on liquidity. We sweep liquidity and we are looking to push down. Setup, we're looking to push down because we do come back inside of that liquidity sweep and we prove that we are moving downwards. Then we switch to our entry. We find something like our orb or whatever your model is going to be. And then you are looking for your entry. We see that retest. We go ahead and get that entry and we are rewarded with this entire play. Okay. Now, once again with market structure, on days like, for example, Friday, this market structure was absolutely god awful. We saw horrid market structure, right? What is here? Not much. That is okay. That is okay. Okay. You're not always going to see great price action. You're not always going to have a play. And here's another example of that. Okay. So figuring that out, establishing your higher time frame bias, establishing your lower time frame setups, and establishing your lowest time frame entry model is going to help you guys get better at trading. I guarantee it. I'm telling you right now, and you guys should be fired up because, I mean, I just proved it to you. And I do also have one more thing. I have one more thing. You guys can also use key levels by Liquid Trader. So here is that. You guys can use key levels by Liquid Trader, key levels, Liquid Trader. These are all of my settings. Take a screenshot of them, do whatever you need with them, and you guys can customize this thing a lot. You guys can use daily averages. You guys can put EMAs on this thing. You guys can do almost everything, right? And what is this going to give you? Well, this is going to give you your PM highs, your New York highs, your yesterday highs, yada, yada, yada. So I'm going to turn off this kill zone one right here. So you can see all of these orange lines. So we have PM highs up here, okay? We have PM highs up here. We have today's highs up here. We have yesterday's lows. We have PM lows. We have yesterday's high all the way up here. So that is how you understand, say we're coming up to yesterday's highs on New York. Well, I know that New York high and obviously yesterday's high is right there, so we could sweep. Well, say I have London highs right on top of New York's yesterday high. That's a good area to sweep, okay? So those are things that you want to look for. And like, look at this. Even this is a pretty good sweep, right? PM lows right here. We sweep these. You go ahead and find a nice little entry, press up, okay? Very, very easy to understand and to replicate because you now know your bias for every single time frame and you have even more confidence in where, when, and how the market is planning to get there, okay? And once again, you'll be wrong. I'm wrong. I'll be wrong. It's part of it, right? But overall, your strategies are going to reward you for taking the time to understand, once again, where, how, and when the market is planning to get to wherever you think it may be headed, okay? So for example, when we sweep these PM lows, where is my idea? Well, my idea is that once we sweep these lows, right, we come up and then we come back down, we sweep these lows, we realistically come back, test some kind of, fair value gap or something here. Then we come up and we possibly even sweep these highs and then continue downwards, right? Of course, we don't get that, so I was wrong. But if we were able to enter the trade right here, right? If we were able to enter our trade right here, say off like a retest of a fair value gap, well, was I really wrong? Was I really wrong? Do you think we would have gone break even here? Yes, 100%, right? We would have definitely gone break even here, and you wouldn't even have gotten broke even at all. You would have stayed in this trade and you would have never gotten stopped out. You never even would have been able to take a drawdown. Yes, you wouldn't have really hit your main TP, but that is okay. You understand what's going on with the market, and this is also going to keep you very, very safe in understanding, hey, we're probably going to put our stop loss a little bit below this just in case it comes back down and wants to sweep again. We're not going to get swept out because we understand that, and we understand that market structure is now possibly looking bullish here. Our setup is looking bullish. We just swept these lows. Now I can go down on the lowest time frame and look for a possible entry where we can look to target the upside, okay? Now, of course, horrible day of price action. I mean, sideways market, really, really bad. If we had some better price action, I could almost promise you that we run up and hit these PM highs, possibly even running all the way up to those yesterday highs if we actually saw some good volatility. But we saw things like the Iran war news come in, and those kind of things are going to halt the market to the point where people don't really know what's going on. There's a lot of indecision, so the market doesn't really do much, right? These are things that you need to understand. I know I've said the same thing many, many times, and I did that on purpose. One, because I think that drilling it into your head is probably the best way. No one wants to keep watching these videos, so trying to get this information and the key points drilled in your head as quick as possible is going to help you guys. God. Is going to help you guys get better at trading. So please, please, please do not take this lightly. Please pay attention to all this kind of stuff. And if you guys need to rewatch this video, go take screenshots, go write down the questions that we had in those first couple of slides. Please go do it. It's not going to hurt you. Okay, I promise you it's not going to hurt you. getting better at trading in the market and, maybe having to relearn something is only a positive. You're only going to get better. You really cannot get worse by learning. Okay. So that is all I have for this video. I don't want to waste any more of your guys' times. I hope that you guys do continue your learning, continue to take action on what we have been teaching in this boot camp. Tomorrow we will be covering, let's see, what are we covering tomorrow? Tomorrow we are covering risk management, which is a huge, huge, huge video. So I want all of you guys here for that. Please make sure you guys do drop a like as always. Make sure you guys do subscribe and make sure you guys do join up on our free Discord, which is linked in the bio. You guys will get access to our eval giveaway and our free premium membership giveaway if this video does get 50 likes. So hopefully we can get there. Hopefully we can do a little bit of a giveaway and hopefully we can catch a banger tomorrow on our market open trading.